Hey everyone, welcome back to Corporate Decoder. Today we're diving into Athena, Bitcoin Global's latest report, but unlike their crypto ATMs, this report might not dispense riches. We'll see if their numbers are a bull or bear. This company is in the business of Bitcoin ATMs and related services. Basically, they are trying to make it easier for everyday folks to buy and sell crypto. Before we dig in, if you're finding value in these decoded deep dives, smash that like button and subscribe. Also, the cool kids are hanging out in our Discord community. Link down below in the description, so come join us. Alright, let's get straight to it. First, the important numbers. Revenue came in at $72.6 million. That's a notable drop compared to the $81.4 million they made in the same period last year. Their cost to provide these services also decreased, landing at $64.5 million compared to $68.1 million. This means their gross profit, which is revenue minus those direct costs, took a hit, falling to $8, bottomed from dollars, a 40% decrease. Think of it like losing 4 out of every 10 customers. Ouch. Net income also went down. Basic earnings per share dropped from 0.000000000064. Diluted shares also took a hit from 0060. Their net income or profit was $2.6 million, down from $6 million last year. So what's going on? According to the report, this dip is due to market uncertainty. It sounds like fewer people were buying and selling crypto and the price per transaction wasn't as high as before. It's as if the market got a little spooked. Let's check up on their assets. Cash and equivalents actually increased slightly from $17.5 million to $18.3 million. That's good at least. But here's something to keep an eye on. Their total current liabilities, the bills they need to pay soon, are up from $25.4 million to $27.4 million. Looking at cash flow, the money coming in from their core business, they generated $4.2 million, which is less than the $7.3 million generated last year. Here's another point. They had zero proceeds from debt this quarter. Net increase in cash and cash equivalents ended up at $2.1 million, so the overall picture is a bit mixed. While they have more cash, their profits are down and they are accruing debt. They also have $3 million in convertible debt that has to be repaid in the short term. Let's talk about where the money is going. Tech and development spending went up. That's investing in future growth from $98,000 to $48,000. That's because they actually reversed off cash losses for cash in transit, 208 money this quarter, which is unusual. Unrealized loss of crypto assets held ended up at $46,000 compared to $126,000 from crypto asset realized loss last year. Comprehensive income is a little all over the place because of FX fluctuations as well. Not a big impact, however. A lot of the company's money is committed to operating leases, which consist around a third of the company's total liabilities. Now let's take a peek at what the executives are saying. The CEO and CFO signed off on the report's accuracy, but it's worth noting something we will dive into next. It states that their disclosure controls and procedures were not effective due to material weaknesses in financial reporting. Basically, the financial report is not accurate and there's some material weaknesses that need to be addressed. The Bitcoin network has many risks. It depends on volunteer consensus and the open market system that may result in undesirable outcome. Also has some potential lack of incentives for people working in the ecosystem. It's a reminder that regulatory frameworks can change, and that is a huge consideration. The regulatory landscape could affect our operations. Their international exposure continues to be El Salvador, and they should manage their operations and cash in and out of these jurisdictions carefully. The company allowed its employees with vested stock options to exercise with the use of a non-recourse loan agreement with the issuances of shares. These agreements originally had a maturity date of 48 months from the date of exercise, which could mean potential problems later on. The board of directors can authorize the issuance of preferred stock, which could diminish the rights of holders of our common stock. Now, putting this all together and playing Warren Buffett for a minute, here's my take. Athena Bitcoin Global is operating in a really tough space right now. There are bankruptcies in major market participants, so they need to be careful, and the prices of Bitcoin are always fluctuating up and down like a roller coaster, and new laws could really shake things up for them, and potential legal battles are something to keep an eye on because that takes money and time away from growing the business. What's their strength? It's great that their executives and staff are highly knowledgeable because that will matter more now than ever. In this environment, it's probably wise that they've decided to focus on Bitcoin ATMs and related services. For now though, I'd hold off on being too optimistic until those warning signs are removed. Alright, that's our breakdown of Athena, Bitcoin Global's latest filing. What's your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.